Welcome to the Stock Play of the Day. Today we're going to be looking at some of the indexes. Specifically, we're going to be talking about the QQQ, which is the ETF that tracks the Nasdaq. We'll discuss, should we pass or should we play? Good afternoon, everyone. My name is Brian Overby. I am the Senior Options Analyst at Ally Invest.
And I'm Lindsey Bell, Chief Investment Strategist at Ally Invest.
Well, Lindsey, I have a chart of the S&P 500 index, and guess what? There's some green on there once again, and with quite a few of the other indexes too. So what's going on?
Yeah, we got a lot of green across the board this morning. It feels like a nice Monday after a big week last week. The S&P 500 ended last week up 4.9%, which was a big week. The Russell 2000, though, led the way up 8.8%. But since we're looking at the S&P 500, this is the third week in a row, if you can believe it, Brian, that the index was up over 3%. That hasn't happened since 1982. So kind of a big deal here. And we're continuing the momentum that we saw over the past 3 weeks into this week. Again, what's driving markets lately? It's really been all about optimism about the reopening of the economy. I'm here in New York City, and today is the first day we're entering phase one of reopening. So I think that has a lot of people in the financial markets that live and work here a little more excited. New Zealand saying they eliminated the coronavirus, so that's obviously positive. Data from Open Table about restaurant bookings and flights and hotel bookings. All these things are starting to show improvement. Of course, they all fell off of a cliff when the economy shut down in March. So we're seeing little glimmers of hope that we're moving in the right direction. And that's what that jobs report on Friday was all about. We gained 2.5 million jobs in the month of May, the most ever on record. Of course, there is some concern that there might be a little bit of noise in that related to the PPP. We'll see next month when the June data comes out what happened. But for now, investors are taking it in stride and they're running to the bank with it. And you just see the market moving higher here today on that continued optimism. We're going to get some more economic data this week that will help us really understand if April, in fact, was the bottom from an economic front. That doesn't mean we're necessarily out of the woods. This was a swift bounce off the bottom. You see in this chart here, down 34% to the bottom, a jump up of 45% from March 23rd to today. Who would have thought, Brian? Now, while it sounds like there's a lot of momentum that's continuing that I talked about, and a lot of green across the board feels pretty good, there are some signals that are flashing caution, Brian, and that I'm seeing, that I just noticed this morning. One of them is the VIX that's up a little bit. In an up market, the fear index you would hope and think maybe would be going down. I want to get your thoughts on that. But also the other thing I noticed too, the 10-year yield had a huge week last week, up 24 basis points in 1 week. That's a big move. It's at the highest level since March, I think. So it's signaling that investors do think that this could be the beginning of an economic recovery. But what do you make of the slight downward move? I mean, it just might be taking some off the table after a big week last week in the 10-year, and then the VIX. Brian, what do you make of that move in the VIX?
Right. Well, yeah, there's a couple of things that happened with the VIX index in that we did break below 30. So we have came down to a little bit more normal levels. I'd feel more comfortable if the VIX was down around the 20% level, but we're still pretty high. It's prior to this big downturn and big upturn in the marketplace. If the volatility index was up around 25, a lot of people would be like, oh my gosh, the VIX is at 25. That's such a big level relative. So just want to put things in perspective. But one of the biggest things that you see, it's very rare when you see a big market rally like this, but you do see the VIX index also go up with it. And before I got on the show, it was up about 68 cents today when we have all the markets across the board, and including the Nasdaq. Well, I think the Nasdaq just turned a little bit negative right now. But with that said, we still have most of the indexes leading the way, and the VIX tracks the S&P 500 index. And when you see that, that just adds a little bit of uncertainty to the actual rally. And one of the things that we are seeing, if you look on the chart, we maybe a little bit overbought, if you could, because we're seeing all the major averages have made their swing up. We're getting quite a little bit away from the 200-day. So those are the only two things, and I think that about the VIX index, these things are what am I saying? That make you a little bit nervous because we've came so far in such a short period of time overall. So we're going to kind of go with that momentum today with the trade that we're going to look at. We're going to talk about the Nasdaq. So obviously Nasdaq is led by tech companies. We have an NDX chart here. What are some talking points in the Nasdaq, Lindsey?
Sure. Before I get into this, I just want to remind our viewers that everything that we talk about in the Stock Play of the Day show between Brian and I, it's not meant to be a recommendation. It's just kind of educational, here for educational purposes, just pointing out things that we're noticing in the market and that we think you should maybe take note of as well. So when I look at this Nasdaq chart, Brian, today we are at a 52-week high, or at least we hit it at one point this morning. We'll see if we close there today. I think that'll be a key indicator, but I know you'll talk about some of the technicals. The Nasdaq has been one of the key leaders in this recovery. Technology in general, like you said, almost 20% of this composite index is within the tech sector. You have consumer services representing, technology is 50%, consumer services is about 20%, and then you also have healthcare is a big chunk at about 10%. So those three sectors comprise the majority of this index. It didn't fall as far as the other indexes going into the downturn, and it's rebounded a lot faster. So momentum has been in its favor. I will say today, you're seeing it in the green, at least last I checked this morning. It was also in the green like the other major indices, but not up as much as the others. Some people question if the momentum in this index or the tech sector in general can continue as we move forward. And I don't think it's a zero-sum game. You are starting to see a lot of people talk about, investors are always looking at value versus growth indices, and value has been outperforming for about since mid-May. So that's been a trend that has continued, outperforming growth. Growth is mostly technology. Value are those sectors that typically do well when you see the economy improving. So or interest rates improving is another example, like financials, utility, energy. Financials and energies have been doing well over the past 2 weeks here, but we still think that there could be opportunity for upside in the Nasdaq because think about our economy. The reason that these stocks had done so well is that the work from home situation was made accessible by technology. It's just the trend of our economy in general. I talk about this all the time, Brian. Our society is becoming more and more connected thanks to the advancements in technology. We're becoming smarter. We're able to do more. We're becoming more productive. So there's a lot of different ways that you can play the technology sector to take advantage of that. This is really just the broadest way to look at without looking at the technology sector in general. This is, a broader index. So you're taking it, one step further away. But it's really been representative of that trade. And I think it's something that you could still see positive momentum behind. You may not see the sharp move that we saw over the past couple months in this index going forward, and maybe some other indices will pick up the slack that they've provided over the last several weeks. But that's to be determined. Regardless, we still think that we don't expect the tides to turn entirely, is I guess what I'm trying to say, is that you could still see upside in this type of vehicle, and which is why we're talking about it today. It's always fun to talk about something that people are starting to think differently about. There's been a lot of volume in the Nasdaq over the course of the past week, while you've seen some of the other indices perform better than the Nasdaq, even though the Nasdaq was still up on these high volume days. Some technicians point to that as people potentially taking profits when volumes are high, but performance is just, muted to weaker. And so that's something we'll keep our eye on too. But I think, Brian, you've been looking at the technicals in this, and you have some interesting thoughts about a potential trade strategy that our viewers could consider. And before I toss it to you to go through the technicals and the trade, just want to remind our viewers that we do take questions live at the end of the show. So be sure to write in any question, anything that's on your mind for Brian or I to answer. Over on the right-hand side of your screen in the chat box, we'll get to it at the end of the show. And we look forward to your questions then. So Brian, talk about the technicals in the Nasdaq for us.
All right. So if I look at the Nasdaq, and we did actually mention this level, and one of the things that we were looking for is a new high in the Nasdaq. That would be very positive just for the overall market. And lo and behold, we start seeing the Dow Jones Industrial Average, even sectors that you would just not really expecting as big a moves. Like we're seeing the airlines leading away today. Boeing is one of the stocks, one of the big market gainers in the Dow. But we did get that momentum from the Nasdaq. And we mentioned this support level or this ceiling last week, and the Nasdaq came up and touched it a few times and then exploded on through it, and then did make a new high today. Now we're looking at the Nasdaq index. We're going to talk about the QQQs, which is an ETF that tracks the Nasdaq. But overall, the Nasdaq is a very expensive index. It's a $9,818 point index. And what we really want to see is that this new high and this momentum continues, and that now that ceiling that we broke through will provide some support to the downside. That's the goal. It's 100% a momentum trade. It's meant to be a paper trade. We're just trying to learn here on the stock play of the day. So let's look at the QQQ and let's get into the option trade. So right now, like I mentioned, we're kind of gone between being up and being down in the Nasdaq. We see the QQQ is basically flat right now. It's down about 11 cents. We do want it to stay above that previous 52-week high or all-time high, actually, that happened before the big downturn in the marketplace. So that's going to be something that we want to look at. But based off of that information, assuming that we could close somewhere above that level, I'd like to look at a long call spread to try to grab this momentum. And it's going to be a shorter term trade. We've looked at a lot of trades recently on the stock play of the day where there were fear of missing out trades. We call them FOMO trades, and that we wanted to try to take positions in underlyings that we wouldn't mind owning a little bit longer. Now we're looking at just a speculative trade that's all based off of momentum, but we need to be able to manage our risk of that trade. So the strategy that we're going to look at is a long call spread, and we're going to go out 11 days. So just the fact that we're only going out 11 days kind of shows you that we're taking more of a momentum-based trade than we are trying to go longer term, going out 2, 3, 4 months in time. This is definitely looking at like a swing trade overall. So we got the market at 239.53. On the left-hand side here in the Ally Invest option chains, we see we're buying the 238 strike call. All right, now we're going a little bit in the money on this, and we're going to go out of the money, and we're going to target a level that we think this underlying could get to within the next 11 days, where it has the potential to make it. Now, how do I know that this level is possible? Well, we'd like to look at the expected move, and the expected move is quite simply looking at if I bought the most at the money call and I bought the most at the money put, what approximate move does the marketplace think could happen over the next 11 days? And so we're going to call this 360. We'll call that 4. We'll make the math simple. $7.60 is a fairly decent move in the underlying. The marketplace thinks that is feasible. That's why these option contracts are trading for what they're trading for. So we're going to go from that point. We think if we say $7.50, that puts us right at around 247-ish or so. 245, 247. Okay. So down here, this is about where the expected move would be at. So we want to make sure that this underlying can go at least to the strike that we want to sell. So we're going to sell the 243 strike. And the market is saying that it's very feasible to get there. Now, expected move doesn't have any regard to direction. And I always got to give that disclaimer when I'm talking about it. But we know that if we do this trade, we're going to go a little bit in the money, sell a little bit out of the money, but we have the potential to get to that level. All right. So let's look at the profit and loss graph. Well, overall, let's look at the profit and loss graph and what the net cost of the trade would be. So the maximum width of the spread is $5. That means that's the most that it can trade for. When we started on the call, this was actually trading for $2.50. So the market has came down a little bit. It's now trading for $2.40. That will be our maximum loss of the trade. Now, that's a midpoint fill, and this is always meant to be a paper trade. We'll officially make it a paper trade for this week by putting it in the right rail over here, and we'll say $2.40. Now, we want to work that trade to get that. Not always a midpoint is a guaranteed fill. And you also want to add in commissions when you're thinking about the total overall risk. But our goal here, when I'm looking at this trade, is to try to get something where I have just as much upside as I do downside. It's basically a 50-50 trade. Here, if we pay $2.40, it's $2.45. Let's make it $2.45. And I think that that's a fairer price. $2.45. That means that we have $2.55 worth of upside. You take the 5 points on the width of the spread, you subtract the net debit that you paid for it, $2.45. That means you have $2.55 worth of upside, $2.45 worth of downside. And I have the trade over here in the right rail. If I'm going to remove this, and let's look at the profit and loss graph. Now, you see, between those strike prices is basically where we're playing. If the market continues on up, right, we're going to take our ball and go home. We don't have any more upside potential. If it continues on down, we have limited and known risk, that $2.50. So this is definitely a momentum play where we're hoping over the next 11 days, we can get a move up to an area that looks feasible based off of what the option market price is pricing in, a potential move. So $243 would be our goal. We'd hope it would make that range. So now, how can we apply some risk mitigating factors? If I did this trade, we've already set it up where it's a 50-50 trade. Basically, we're spending about as much on this investment as we have to gain. But could I manage the risk a little further? Yeah, if you'd like to. So if I'm going to take this approach where I'm doing a little bit more speculative momentum trades, I may say to myself, well, if I'm down $1 on the long spread, in other words, it's trading for $2.45 right now. If it starts trading for $3.45 in that range, I'm going to look to get out on the downside. But on the upside, we're hoping that we can still make that $2.50. So we'll let the upside run and we'll mitigate the risk on the downside. That's an interesting way to approach it. Also, we talk about the stock play of the day overtime every Friday. So we're going out past Friday. So there's going to be some potential to alter this trade or to actually roll into a different trade. And we'll talk about that on the stock play of the day overtime edition. All right, Lindsey. Do we have any questions that popped up in the chat box? I don't see it right now.
No, we don't. I don't see any questions right now, but okay. That's an important call out you made about stock play of the day overtime every Friday at noon. Brian reviews this trade that we talk about on Mondays, and he will adjust it as necessary or make suggested adjustments based on what has happened over the course of the week. And it's a really great thing to just follow up if you're interested in the trade and learning how to adjust going forward. So I definitely recommend our viewers check in on that on Friday at noon. But again, we are still available to take questions here while we're still live with you all. So feel free to type something in and into our chat box, and we will get back to you today. Brian, is there, if we don't close above the 52-week high today, how would you adjust this?
All right. Well, I would be looking, if we weren't doing the stock play of the day at noon, I would be looking to do this trade a little bit later on during the day. I would look a little bit closer to the close because I do feel like that's fairly important that we do close above that previous all-time high that was done before the big downturn because of the coronavirus. So that's the way I would kind of look at that trade. But if the market actually does not stay above that level, I would just be waiting to get back to that level. In other words, I would let the trade play out. I would let the marketplace come back in the Nasdaq and try to get that momentum back to the upside. So this is all about a momentum trade. It's the fact that we've hit a 52-week high. We have a lot of momentum in the markets in general. The only really scary thing here that we're seeing here is the VIX index actually coming up with the markets. Usually the VIX will come down and get down to a more quote unquote normal level when we see big rallies like this in the marketplace. So there's still a lot of nervousness, and rightfully so. We don't have a cure for the coronavirus. We're making headway, but we haven't came up with a vaccine or something that will actually knock out the virus. And until we do, there's going to be a lot of nervousness in the marketplace and the economy just in general. So you want to get
we did get a question.
Oh, okay.
We got a couple here. Some of them, they seem a little related. So Todd and Mike, Todd's asking about how do you feel about hotel stocks, something like Soho. Mike's asking, would you take on airline stocks? That would be a helpful question. I think what you're seeing, I'll give my thoughts and then Brian chime in and talk about what you're thinking. I'm not familiar with Soho, the ticker. And again, these aren't recommendations that I'm giving, just kind of some educational insights. You are starting to see the airlines and the hotel stocks finally make moves off of the bottom. They had been really bouncing along the bottom there. They've been a little, especially the airline stocks have been pretty volatile. American, I think, came out, was it last week, and talked about how they're going to increase routes because demand is starting to pick up. Like I said at the top of the show, you're also starting to see hotel bookings pick up a bit. So it seems to me like these types of stocks have become very popular in the effort to find value in the stock market, and also along with that reopening optimism trade that's going on in the market. So you're seeing a lot of investors start to flock to these in the last week or so. For me, if I'm looking at these names, I'm going to try to find something that is high quality, less leverage, strong cash flow. And maybe a little bit higher end, just my personal opinion. I feel like if I'm going to go stay at a hotel, I might do something in the Marriott, for example, type of range, or Hilton, where a little bit of a higher end, mid to higher end, where I feel more comfortable staying, because the coronavirus is still around, even though we've made great progress there. And like Brian just said, there's no vaccine. So that's just my personal opinion and what's going to make me feel comfortable. So I think take that types of things into consideration too, but also look at the financial, look at the metrics, look at the potential trajectory for these stocks.
All right. And then, but with the airlines in general, like we saw Warren Buffett actually sell some of the airline stocks after buying after the dip, and then getting a little nervous and selling and getting out. So there's still no real precedent as to why the airlines are running the way that they are, why a lot of the companies in that range. So it could be a little bit overdone. Who knows in this instance, but they're not trading off of fundamentals. That's for sure. We're still seeing the TSA came out and said that the number of people that they're checking in the airports is still down 83% from the beginning of the downturn in the marketplace. So there's still a lot of nervous signs about that industry. And if you're doing it, if you're investing in these type of companies, you're really investing in the fact that you think we're going to come up with some type of answer for the coronavirus. I think that's the type of play that a lot of people are making. And the reason why we're seeing so much momentum in that is that people are just guessing that the economy is coming back now, that things weren't as bad as first implied, and that there might be a cure in the near term. And that's the only rationale that I can get as to why we would be rushing to get back into all of these travel stocks and hotels and airlines, because the fundamentals of those companies are still not great. One thing that has helped, obviously, is that the Fed has came out and said that, basically opened up their checkbook, saying that we're willing to do almost anything to make sure that our economy still lives and thrives. And I don't think as many people expected the Fed to print as much money as they are recently. So overall, that has really helped stabilize the market. And it's great to see the government actually backing all of these businesses, big and small, across the board.
Yeah,
All
I
right.
think that's all to say, Brian. You and I are on the same page. There's probably still some volatility left in these types of stocks going
Yeah.
forward. We do have
Without
more
a doubt.
questions coming in. Mike asks about Sorrento Therapeutics. I think, Brian, you might have looked at SRNEs, the ticker. I think you might have looked at this stock before. It's in phase 3 vaccine testing. How would you feel about taking a flyer on that, Brian?
Well, if I'm going to be trading in these underlines, obviously, I think the phrase is a flyer really applies. So what are some ways that I can do this? If I'm doing it, I'm going to be buying and selling options. A trade that you could look at if you're thinking that, oh, gosh, we might break through to the upside, is look at trades like butterflies. And here, let me pull up the options playbook, because all of these stocks have volatility in them. And inside that volatility means that you're going to be paying up if you want to try to take flyers. So one of the strategies inside the playbook that I like to do when things are expensive is actually like a long butterfly. Definitely want to look at a spread like we did today. And part of the reason why we looked at a spread today is that we still have a lot of volatility in the market, with the VIX index being at 25%. But if I'm going to take a flyer on a stock that's trying to figure out the vaccine, that volatility is going to be high across the board, really high. So the trade that I would like to do there is try to pick a range, because you can go pretty wide with these butterflies and still get them done fairly cheap. But this is a long call butterfly, and that's the way that I would approach it if I'm looking at it as a speculation trade on, you could even do more than one, because you can get butterflies done for a reasonable price. Maybe you pick a couple of the stocks that are in the game that might work out, or might come up with some type of strategy that will help us through these troubling times. All right. I guess that's going to be it, right? Or
We do have one question we can answer very quickly from Richard. Do you think there'll be a pullback for those that are on the fence? And my answer to that would be, it seems like we have a lot of momentum and optimism going in through the summer, but I do think that when we get into the fall, don't forget the end of July, some of the stimulus that's out there for individuals and small businesses runs out. So that's going to have an impact going into the fall. And then in the fall, we want to watch for if you start to see cases of coronavirus tick up. Over the course of the next several months too, how bumpy is the economic data that comes out? Will companies feel more comfortable providing guidance when they release second quarter earnings in the month of July? Remember, the first quarter, they pretty much all withheld or suspended their guidance, or the majority of them did, because it's just too hard to look forward and look through what the impact of the coronavirus is going to be. So I think these are all different things. There's push and pulls of geopolitical tensions with China as well. So, I mean, there's a lot to watch for. And, I can't confidently say we are certainly on firm ground to move upward and onward from here. I think you could get some hiccups along the way, and you need to be prepared for that. So that's my 2 cents. Brian, I don't know about you.
Well, the VIX answers that question for me, right? The fact that the VIX index is up today, when almost all the other indexes across the board, all the major ones, are in the green, and that just is showing exactly what Lindsey is talking about, and that's why there's a little bit of nervousness. Maybe the rally's a little bit overdone to start with, and that's what the VIX index is saying, at least. All right, that's going to be it for this edition of the Stock Play of the Day. Please make sure you click subscribe and ring the bell, and I will be back this Friday to talk about the long call spread that we just did in the QQQs. Thanks for coming, everyone.
Thank you, everybody.